All right. So, um, yeah, so I'm gonna be showing you guys my strategy. Thank you, JS. And so, first and foremost, what I like to look for when I'm trading is patterns or whatever. Um, I came across, of course, the BTMM strategy, and that's pretty much how we all met each other is through BTMM or whatever. And so what we focused on was the M's and the W's. That's the go-to, and then the EMAs and things like that. Which still, all in all, it works. Yes, it does. So um, I wouldn't stop studying that strategy, BTMM. But since I've been trading, from 2020, of course, I've found other things that work. And the patterns that I'm going to show you today is what's really been working for me to like really change my trading or whatever. And I can't hear anybody, so I don't know if, oh, I got everybody on mute. Okay. All right, cool. Well, if everybody's on mute, that's cool. Huh? Oh, okay. All right, cool. Well, yeah, since I've been trading since 2020, I've come across, other patterns that have really worked for me and really changed, my account sizes or whatever. Some of you know that recently I, just went to go try to do the funded challenge and became a funded trader. And I literally did it in like what it was, babe, like a week. It was like less than a week. I was I was done with the challenge or whatever. So that's kind of like I'm like, okay, this is it. I'm sticking to this and I'm not changing it or whatever. So and here I'm saying, the most important thing you need to realize when you're trading is that you do need to have a good relationship with yourself. Without that, you're not going to be a successful trader. I've had to like make a lot of sacrifices in my life, stop talking to the friends that just want to hang out and not really pursue their goals and dreams like that. My goal and my dream is, you know to keep my family from having um to I guess, yeah, need to work for someone else. That's my dream and my goal for my family. I don't want anybody down my bloodline to ever have to really work again or whatever. So that's my dream, and that's what I'm always pursuing when I'm trading and I'm studying and I'm spending all of my time doing that or whatever. So we're gonna get right into it. So the first thing that I look for when I'm looking at the market is I search for imbalances. Now, does everyone know what imbalances is? Because it is very popular. Um, can you close that restroom? Thank you. It is a very popular term when it comes to the foreign exchange market or any market. If you don't know what it is, it's when the market receives too many kinds of one order that could be a buy or sell, and then not enough orders to to counter it. And any candle which has a full body, you would look for the part of the candle that isn't overlapped by the previous and next candle's wicks. So I do have a picture of that if you don't know what that looks like. Let me X this out. So when you're looking, you see this is a downtrend here. So this candle, it went all the way down, which people also call these gaps as well. Imbalance gaps is one and the same. So this candle went down and it left a gap or imbalance before there was buyers to counter that sales. So you see here, you got a wick, you got the imbalance or the gap, and then you have a wick. And then it takes some orders and then it does it again. You have a gap and you got this wick to this wick, and that's the gap in between. Then I have it over here as well. There's an imbalance above the point of interest. And the reason why this is a point of interest is because this looks like to me demand. And so there's space between this point of interest right here, this wick to this wick right here. Can everybody see that? And so you see this demand, and then the price action goes up. All in all, what I would be looking for is for the price to come back. So to come back and then continue in the direction that it was already trending. So hopefully everybody understands that. You guys are really quiet. All right. And then so next, the next thing that I look for is a Quasimodo pattern. Does anybody have any questions actually before I move forward? Does anybody have any questions about imbalances and how that looks?
It's not so much about how it looks, but how do you know whether it's going to react from there, if it's going to go through it and, react off the like supplier demand zone? That's kind of the thing that I've always been unsure about. It's why I never used them before.
Okay, that is a really, really, really good question. And the way that you would know that's going to react off of, which I wonder if this picture is probably not a good example. Okay, so from what I can see in this picture here that I have on this side, so I guess what I was gonna get into next would be like the Quasimodo and the Head and Shoulders. The way that you know that you have a high probability that it will react off of that is because the pattern would be made. And so I'm gonna get into that next with the Quasimodo, but I already see my quasi right here. It's like a shoulder, and then I have a head. The head broke um, to the upside, so it broke this candle right here. Me and Jarrell, we go back and forth with candles and wicks. He loves to use wicks, but I'm a candle person. If my candle did not break this high, then I would say that the high was not broken. But he likes to use wicks. He'll say if the wick did not break the high, am I correct, babe? Okay, if the wick did not break for him, then he won't get in. So you gotta find what works for you. But for me, it's candles. So I see that this candle broke these candles high. So that's a break to the upside. And then I had the other shoulder be created right here, um, which it's uneven. So I would say this is a quasi pattern, and then it took off to this side. It left the imbalance here, but in my mind, because the structures were broken to the upside, I'm looking for buys. But I'm not looking for buys. I'm not looking for buys in these areas because I'm like I'm not a breakout trader. I'm not looking for buys in this area. I'm looking for my imbalance or my gap for price to come into it. It can come past it because this is still demand. It can come past it a little bit, just like how this wick did. I'm looking for it to come back into it, and I'm going to be confident in this trade and take it. I know that we've taught you guys in the past, like the order blocks, just take it when the order blocks come. But this is like next level. This is like you got to have your confirmations. I see my pattern. I see price being broken to the direction of the trend. And then I have my supply and demand. And then also which I'm gonna get into, like you can use other things as well, like the fib, trend line. You can use all of that to get in a trade. You don't have to get in here in this area if you don't want to, but I am because I'm confident I've seen it enough happen. I'm gonna get this the best price that I can get. But if you want to, what you can do is you could draw a trend line right down here, this area right here, when you get this pullback, or you can even draw a trend line. Well, no, I would say, yeah, you will wait for a pullback, you draw a trend line, and then you take it up. But all in all, you're still waiting for some type of pullback to go in your direction. So it's hard to like be like when are you gonna take the trade? Because you always want to get the best price. You don't want to be way up here. Way up here, it's like they've already done what they needed to do. But I don't know. That's hard to explain. Do you got any insight on that, babe? Yeah, to get in, like just taking it versus waiting for like another confirmation. Huh? Okay. I don't,
Can y'all hear me? Can y'all hear me? All right, so if you can turn it down. All right, so if y'all can hear me,
You're really echoey. There's like a really strong echo when you talk.
just turn it down a little. Hold on. Am I echoing now? Am I echoing now? Am I echoing?
It's still echo. There's still an echo there.
yeah, you'll probably have to go downstairs or something because it is echoing.
Yeah, I'm trying to talk, but I know it's gonna echo. Yeah.
You're good now. It sounds better.
Yeah, you're you're good now. There's the echo's away.
So y'all can hear me? Or is it still echoing?
No, you're fine. Go ahead.
All right, so with the quasi, that's how you will get in that position from the imbalance. So by the time that price came back inside of that area there, by the time price came back inside that area there, where you see the imbalance happening, um, the quasi has already been made, and that's a key indication that price is about to reverse. So as you were speaking about to the left, price was broken on the left side already. So once price broke the previous structure to the left, that's letting us know that price is going to continue probably in the upper direction. And how do we know that? By looking at, was there a two counter pullback before price went into the uptrend? If you look there, there was a two counter pullback right before the imbalance was made, and price cleared that area. So at that point, we was going into an uptrend from there. So you had a chance to take it before the imbalance was right there. When the imbalance was made, you could have took a position there, or you could have took it when it goes right back inside that area. If you want to be safe, I don't know what time frame this is, but let's just say that was the hour chart right there, where the imbalance was at the bottom down there. What you could do is you could have dropped down like maybe to like the 5 minute and look for a head and shoulders or a quasi there inside of that area and then take the position. You will still get the same type of RR, actually better RR because you're not trading from the hour. You're actually trading from the 5 minute and you got a quasi to go in that direction. And by the way, the reason why we use quasis, I don't know if she's going to get into that. She probably is, but it's because before price breaks structure, it has to make a quasi or usually make a head and shoulders. Those are the best reversal plays that the market does. So price has to break the left structure before it go into an uptrend. So that's why we take quasis because quasis always line up when it pulls back right back into the imbalance or wherever you taking the trade. You don't have to take it there. Like she said, you can use trend lines to get in. You can wait for confirmations after you get in that area to know that it's going to go up. You can wait for candle breaks. Uh, there's multitudes of ways, but Like if price like to the left of her screen over there, the white screen where all the imbalances are, you see when price tapped back into the imbalance, if you drop down to the lower time frame, that was considered like a pullback, and price probably made a quasi um to continue back down. So you didn't even have to, like on the left side, that bearish, bullish, bearish, that second one with the wait, put it on the second one. Put your mouse on the second imbalance to the left.
The left picture?
Yeah.
Oh, right here?
Yeah. You see that wick that went up there? If that was like, say this is the hour chart or the 4 hour or whatever, if you drop down to like the 15, 5 minute chart, there's a quasi made to go back into the downtrend. And you could have took a position and still got inside of that imbalance and made money going back down.
Oh, yeah.
So,
That's what I was going to get into. Yeah.
okay, so I'm gonna let her finish off, but that's my take on it. Right?
So yeah, so another big thing is that like how Jarrell was saying, quasis and head and shoulders are created on every time frame, right? 4 hour daily, 5 minute, 1 minute, whatever you're trading, you're going to see this pattern. This is why this is so powerful, because literally I'm just looking for the pattern. If I don't see a pattern at the 618, if I don't see a pattern at the order block, if I don't see the pattern at my supply or my demand area, I'm just sitting back and being patient and literally waiting for it to happen. Hold on just a second. My daughter needs me real quick. Hold up. All right, my bad. So yeah, so you're gonna see it on every time frame. So what I like to do, if I see a head and shoulders or quasi being made on the hour, which for the most part I've been seeing happening like practically every day or every other day, I'm trading that. I'm trading that hour quasi or head and shoulders, which we'll jump to the chart so I could show y'all or whatever. All I'm doing is just dropping down to my 5 minute, or I'm dropping down to my 1 minute, and I'm looking for the same pattern to be created in the same direction that I'm trying to take it, and I'm taking the trade. But yeah, let me go over the Quasimodo. If you guys haven't heard of what this is, but I'm sure that you probably heard what a head and shoulders is very similar. So a bullish Quasimodo, you're looking for a low and then a high, and then you're looking for a lower low, a higher high, and then for it to come back into the left shoulder of the low and then take off to the upside. And then vice versa for a bearish, which they call it QM patterns or Quasimodo patterns. You're looking for the same thing to happen vice versa. It's just a series of swing highs and lows that breaks the characteristics of an existing trend, thereby signifying a potential change in the trend direction. Now, did you guys get that? Because I'm about to show the head and shoulders. It looks very similar, but to me, head and shoulders, the only difference with a head and shoulders is it literally looks like a head and shoulder. A head and shoulders are like even, and the Quasimodo, it's not so even, as you can see. Like you see on this bullish, it like breaks. It looks like this dude right here. It like breaks, and it's like it just looks a little off, but it still comes back, and then it goes in your trend direction. So yeah, the head and shoulders is a pattern to identify price reversals, as Jarrell was saying. It has a bearish or inverted head that is very noticeable compared to the shoulders, and so that middle part is always like just higher or lower if you're looking for buys. You could just see it, and you're looking like some people say they're looking for those 3 points, those 3 peaks in the market. That's kind of what it is. It's those 3 peaks, but the 2 on the side, the right and left, it just looks even. Hopefully everybody understands that. And so let me see, do I want to get into this or do I want to show the chart? Yeah, before I go into this part, I'm gonna go ahead and pull up the chart so y'all can see some of this stuff going on, especially the stuff I took last week was crazy. And y'all know that I only trade gold, US 30 and NAS. Those are my main babies that I like to trade. Like, and the reason why I stick to just those three for the most part, because I do trade other stuff, is just because I just like to just stay focused on price action. Like, I could tell you where gold was last week because I traded so much. I traded every single day. Like, I just like knowing, okay, gold already been there. Okay, they coming back there. Okay, they could do this. I don't know. It's just a thing for me. Plus, I see a lot of successful traders. They'll just trade one thing, and that was a thing that probably changed their trading, is because they just chose one and they decided just to stick with that so that they could know everything about that pair or indice commodity, whatever it is. But actually, I'm not gonna show what I trade. Does anybody want me to show them something that they trade, that they like trading, but maybe it beats them up in the market? Does anybody want me to show them how that chart looks? Any GU, GJ traders or anything like that?
Oh, I don't look at these things though, so you show these. I personally don't look at these.
Oh, yeah, I
I
know
get
you
my
don't,
ass
Colin.
handed to me.
Yeah. What do you trade, Colin? Let me go to your, what do you like, CAD?
Yeah, I mainly trade gold or EU, GU.
Okay.
That's kind of the three I mainly do.
Okay, let's check out AU. Y'all can see my screen, right? I'm gonna look at the chat periodically, but it's like kind of in my way right now. Let me go to the hour. So I always do, you know, the whole top-down analysis thing. I drop down from every time frame because if I'm scanning the market, I want to see, you know, what those higher time frames are doing as well. So I'm gonna start off with the daily. Is that a fib that I drew on there? Do I got my fib on this indicator? Oh yeah, let me take that off real quick. Y'all see I only got one indicator on here. Because you don't need too much with this. You can add stuff to it. That's the good thing about indicators. You can always add to it, but you always want to start off with your foundation, which this is my foundation. This is how I start looking. All right, so this is my daily. See, already I see a head and shoulders on my daily. Does everybody see that? AU, head and shoulders. All right. So
Yeah, see it.
yeah, so we got this shoulder right here. We got this head peeking out. We got this shoulder over here. Some people may think this is also like Wyckoff, I believe is what it is, which I believe it is. You know, of course, once price gets here. So already in my mind, I'm like, okay, AU eventually would sell off. That's just my bias, right? On the daily, just by the daily. But how do I get into this sale? I got to drop down time frames to continue to see the price action on that. So now I'm on the 4 hour, and I got my zigzag indicator on here, which I'm gonna, you know, go over why I use this. But well, actually, I'll just say it now. It just helps. It's like training wheels to help you see the patterns. Honestly, that's all it is. It's just training wheels so you can see uh those higher highs and lower lows and things like that. So I like using trend lines. So honestly, if I was trading AU, I'm automatically on my 4 hour going to draw a trend line. Uh-oh, that is not a trend line. Thank you, babe. I'm automatically going to draw a trend line here because I like bounce, like for it to bounce off trend lines. And then also like I like to see breaks on trend lines because that's gonna let me know, okay, we're breaking this trend and we could potentially go in the opposite, reverse in the opposite direction. So already I'm thinking sales, but I drew this trend line right here at this low and at this low. So then I'm going to drop down another time frame and go to my hour and see what my hour is doing. And honestly, I should have did this like back test just so y'all can kind of see how that works. But I guess this is for future. Okay, so AU, right now it's in a shoulder on a daily, and potentially I'm looking for sales. So in order for me to see those sales, of course, I want to see this 4-hour trend line broken to the downside. And then I would go crazy with my sales on AU once it breaks this trend line. But let's see, it's not here yet, right? So I would still, if I'm trading New York or London, I'm still gonna drop down time frames. I'll probably go to, I don't really look at the 30. Jarrell likes the 30. I would go to automatically I'm gonna drop to the 5-minute because that's where I normally get my entries. So on the 5-minute, let's see what we're doing here. The 5-minute, we are kind of consolidated right now on the 5-minute. So like when the market opens, I will be looking, let me see, we had was that low broken? We had a low be taken out, I guess Friday. And so I would be looking for a potential pullback. So I would draw my fib right here. I would draw my fib right here. And I would be looking for a pullback. I will be looking for imbalances in the market to see where could AU potentially pull back and turn around. So I'll be looking for an imbalance. Let me see here if I see any. And this is where you just take your time and you look where are there gaps? Where could this pull back to? And of course you would want it to be in like, that 618 area, which I already see a gap right here. So already I would mark up these gaps. Let me see here. Did that get filled? So we got right here. And then where's the bottom? Is this it, babe? Yeah. Right here. So I got a gap in the market. Move it up a little bit. Yeah. All right. So I got my gap marked up already on AU. So honestly, I would just be sitting back to be like, okay, potentially, even though it broke the low, it broke this low right here, because my zigzag is helping me see that a low got broken. So I'm looking for sales. But before I take this sell, I need price to come into this area, bare minimum. What else do I see in this area? I see order blocks because I'm on the 5-minute. I see order blocks. I see an order block right here. So even though I see this imbalance or this gap, I know in the back of my mind, this is the 618. This is an order block. This is an imbalance. Where do you think my stop loss is going to be? I got to put my stop loss behind here. I got to. And if you want, you can put it here if you want to stay safe. But honestly, I got to at least put it behind here because I know if price comes into this imbalance, it can come touch this order block. And if it can come touch this order block, huh? Yeah, hold on, give me 1 second. If it comes touch this order block, I really don't want it to break this order block, but I do see structure here as well. It could still come come into this as well. This is the 5-minute chart we're talking about here. So the stop loss from this point here is not that many pips. We can measure and see how many pips that is. So yeah, it's not that many pips. So my stop losses are like 20 on, well, I trade gold a lot in indices. So like 20 to 30 pips. And then for the indices, 300-ish, 400 pips or whatever. Those are not big stop losses. But being that I saw the head and shoulders on that daily time frame, I know that my risk to reward would be crazy. So let me go back to the hour. Because you always want to measure, okay, what's your potential take profit? Do this real quick. So if I got in this area right here, I'm looking to take it here. And and it's so crazy how the fib lines up to my trend line, which is, do you guys know about the -27 area on your fib? I'm not sure. Let me know.
No, I mean, I've heard of it, but I've never used. I've seen people have it on, but I've never used it myself.
Okay, so yeah, this is a take profit area for like if on your fib, if it pulls back to the 618 or even like the 88 78.6, this is a take profit area. Now of course, if it pull all the way back to your 618 area, in order for it to continue, it needs to stay below the 38.2 or the 23.6 area, I believe that is. It needs to stay below if it's going to continue down. So right now it's holding, even though I do still need my pull back to the 618 or the 88, between the 618 and the 88 level. I still need to see that pullback happen before I could take it to the -27. But it just so happens when I drew my fib that the -27 is right here where the trend line is. That would be a take profit, because if the market comes down to this trend line, it can bounce off and continue in an uptrend, or it could break, retest, and continue down. Jarrell, he wanted to say something real quick. I'm gonna let him go ahead and speak before I go too far. Go ahead, babe.
All right, so another way, when she was explaining, you see where that you can see right now on the hour chart, we have a quasi being made right now. So there was a higher high here. We just got the break of the left side structure here, and we should continue. Um, we should continue back up to the 618 area. I don't think we'll go that high. If we do, we'll be preparing for that. But if it do come to the 618 area, that's an aggressive way to just jump in as soon as it get there. But like she said, if you drop down to the 5-minute or the 1 minute, whichever one, you want to make sure that you see the transition happen. So usually you don't, like you can see there, right there. You see how price made a higher high and then it broke the left side of the structure there. And then it came right back up and then it tanked. So that is what we want to see initially when they get to that 618 area. We don't just want to take a position aggressively. Sometimes we do, depending on how big the stop loss is. But if the stop loss is going to be pretty healthy and we want to be, the safe way, it would be better to just wait for another quasi to be made, because price has to break structure to the left side before it go back into a downtrend. So that would be a good idea. That's also why you can use zigzags, because zigzags will show you when price breaks structure when they get to your key level. Do it always work every time? No, but nothing's absolute. But your risk to reward is so high when you take these trades, a loss here and there wouldn't be a problem. But like she said, this is very powerful when you understand where you're at in the market and where the market is actually going. So when you do get the quasi or the head and shoulders, whichever one, price is going to actually fall directly in the position that you need to be to make the money. Like, go to the bottom down there, babe, real quick. I'm gonna show them again. Like right there on your 1 minute, to the bottom, to the left, the last lower low. I mean, yeah, right here to the right, right here. Yeah. You see how there was a higher high made, those three candles right there. I think it was to the left, right there. That no, that pull up right there. And then it made a lower low, and then it broke the high, which I like wicks, she like bodies. And then price pulls back, and then it takes off. That happens everywhere. That happens in all parts of price. If you can find and master this pattern, you're going to lose some, but if that's the way the market moves. So by default, you're going to be profitable doing this strategy. Just not strategy, but understanding this pattern. This pattern is how the market moves. What that's a liquidity grab, however you want to look at it. Like some people just take it at the order block. That could be a liquidity grab, grabbing liquidity. So you're getting behind the liquidity. So you're not getting caught up in that liquidity either. That's another reason why the quasi is very powerful, because a lot of times people get liquidity grab on that first grab. But when price decide to start breaking structure to the top side, a lot of times it will continue up in that direction because that's the way the market moves. If you in the key area, the only problem that you will ever have with this is finding where the market reverses. If you can find out what a market reverses and this quasi or this head and shoulders happen, you're going to be profitable and you're going to make a lot of money. So that's all I had to say, man. Go ahead.
All right. And also what I'm seeing here, like even on the 1 minute, the reason why I like candles so much, because like you see this here, where this price broke this low over here. I know, even though like how he said he took a buy here, he won this trade. I know that it's not like a longevity trade. Like you could scalp the market up and you could win, but I know that this is not like this buy here is like not like a real, I don't want to say real because it is, because you won the trade, but it's just not like a long-term buy because the market broke structure to the downside. If you look here, this is like a quasi here. It's like a bigger one though. You got this over here. You got your head peeking out. Structure was broken to the downside. So this is accumulation on a higher time frame of a quasi. Can everybody see that? That this got broken to the downside. So it pulled back. And more than likely, this bad boy about to tank, because not only did it pull back, it made like another quasi and broke to the downside again. And then you got your entry. That's quasi doesn't have to be equal like a head and shoulders, but it is very close. You got your entry here to fill in this gap or imbalance. You take the trade. If somebody got in this trade, they still should be holding a sell off for AU. Now, like I was saying, the trend lines, if you want to use a trend line, you could do it on the lower time frame as well. And you just wait for I'm so used to MT4. My God. How you move this thing out the way? Oh yeah, I could just go over here. You could wait for this trend line to be broken if you're looking for sales. I don't count wicks. I'm sorry, babe. You can wait for this trend line to truly break with a candle break, a retest, and take it down. But yeah, so we're gonna get back to my little presentation thing with the quasi whatever. All right, so the indicators that I like to use when I'm doing my technical analysis is the zigzag. The period that I use is 2 for zigzag, and then I like to use my Fibonacci. If you guys don't know about Fibonacci, like how I was saying, like the -27, the 88, those levels, -618, all of that. If you don't know about the Fibonacci, I would advise you to learn as much as you can about the Fibonacci and its levels, because it can help you. It really can help you when it comes to where am I putting my stop loss. If I'm trying to take a continuation from the 3 38.6, what is it, 38.2? 38.2 level. If I feel like that's a continuation trade, I don't want it to go past, what's above the 38.2? The 50, right? The 50. I don't want it to go past the 50. If it's going to past the 50, then I want to get out that trade, because more than likely it's going up to 618. It's going up to the 88 or whatever. So I would advise, if you don't know about Fibonacci, to truly study it, because it can help your risk to reward. A lot of people like to use it and then they take it off the chart, but it's because they don't understand. The market moves, it moves, yeah, moves. How do I want to say? Numbers move the market, and so Fibonacci is like the key to like understanding like the percentages that the market moves. That's what I'm trying to say. But anywho, next thing that I like to use, which we all know about, is supply and demand, which zones are best to enter. So that's where I'm using my higher time frame zones to be like, okay, where am I at in the market? Am I between a 4-hour? Am I at a weekly? Am I at a daily? I have to have my zones, which of course we gave you guys an indicator to show your zones. I don't really use it anymore. Jarrell still does. He loves to see his zones with his indicator. I like to draw mine myself, just so I can keep my chart as clean as possible. If you don't know how to draw supply and demand on your own, we do have videos that we've done in the past on how to do that on your own. If you still need help, of course, you can reach out to one of us. It will help you, draw your supply and demand areas from your higher time frame all the way down to your lower time frame levels. And then what else? Let's see. So yeah, I talked about trend lines. Trend lines is a big thing. I draw my trend lines on my hour and my 4-hour mainly, because I'm a intraday day trader. I'll hold a trade 1 to 2 days. I really don't want to go past holding the trade 3 days. More than likely, I'm just securing whatever it is, or yeah, whatever it is. If it didn't hit take profit, I'm still in somewhat profit. I just don't like holding that long. But honestly, I know how to scalp the market too. I could be in a trade that I see on the 1 minute, and I just have to hold it for like an hour. I know how to do that as well, but that's because I draw my trend line. I'll draw my trend lines on my hour. I'll draw my trend lines on the 4-hour, maybe the 15 if I'm like really like trying to get like down to the minute or whatever, a minute, like I'm just entering from the minute chart. I'll do that as well. It's not often, because for the most part on the hour, it just feels like that's where the money is. In my session, I trade New York, sometimes London. I'll trade London going into New York, because I might get an early trade at like 5, 6 o'clock in the morning, Eastern Standard Time or whatever, and I'll hold it throughout New York, and then it'll be done by like before morning bell even happens at 9:30 or whatever. So yeah. And then order blocks, we've discussed order blocks in the past. I still use that, just like how I showed you guys like the imbalance or the gaps. I still see my order blocks. I still know that they're there. You have to know that that is very key with trading, is that those order blocks are just like the signals, like this is where the banks are going to come back to those order blocks. But also, pay attention to what I showed you guys with the gaps and the imbalance. I don't know if there's a question. Yes. And then let me see, fundamental. We don't talk about fundamental analysis a lot, because I know I don't like putting you guys in trades when it's news, because I feel like I'm putting y'all at risk. But I do trade news with the patterns, the head and shoulders and the Quasimodo. With these patterns, I'm telling you, you could trade news and you'll be just sitting back, relaxing, like, oh my gosh, I'm in the money, because you're going in the direction of the trend for the most part. Let me go back to which one I want to go back to. Well, shoot, let me just show it on the real chart. I keep doing that. Let me see some news that happened this week. Let's try GU. Let's see. There was some USD news on Friday. Let me go to the hour. Let me see what happened with GU. I did not trade this, but I'm sure something happened. Did GU have a big move? It looked like it gave what it gave what it got. Let me see. Boy, this is why I don't trade GU. This bad boy ain't moving. Nothing.
You have a wee look at oil.
Oil?
Yeah.
Okay. Oil. Do I even got oil on here? I don't. Y'all see my list is so small because I don't do all that. Oops, it's on Forex. What'd you say, babe? US oil. It's not popping up like that. Oh, you trade US oil, Colin?
Yeah, I do.
Jarrell said you need to stick to. How you doing on oil, Colin? I did. Oh my gosh.
I've actually done all right with oil. I think it's probably going to go up to around $85 a barrel. Maybe look for sales there. But I don't know, because OPEC's now cut production, so it might go even higher.
Yeah, you see that gap that it's been trading in right now on the hour?
Yeah.
Yeah, this is definitely going to fill this gap in before it even thinks of buying again. Are you taking sales?
Yeah, I've been selling it. Yeah. I've been
Okay,
catching sales pretty much the whole way down.
that's good. Now what time frames are you using to trade this?
I use from sort of monthly to H4. I don't go any lower than that.
All right. Are you still holding right now?
No, I'm not in anything at the minute.
Okay.
I
Okay.
closed out there on Thursday because I was getting a
Okay.
bit
I feel like I see something here. So I'm like the Quasimodo head and shoulder scanner. What I see, and you see my chart is always pulled back because it's just like I really need to see what's happening. I see. Okay, so I see that structure has been broken. Did it break that high? It did not. No. Well, yeah, it did. It did. Structure's been broken. It has to pull back because, like I said, this gap, it has to pull back. So what I would do is I would draw my fib. I would draw my fib right here. And I would be waiting for this to pull back. And I know that it has to come fill this gap right here. Let me bring it closer so y'all can see. I know, bare minimum, we got to fill this in. This is the 50% level. We got a lot of structure on the 618. Let me see, is this a gap? This is a gap right here as well. Let me mark it up for y'all. And it's so crazy how my zigzag lines up. Like it just brings my eyes to gaps and imbalances. So I will mark up this gap. So I got my imbalance in this between the 618 and my 88. My 88 be my money area. I'm very strong on the number 88. So some people do the 78.6, but I like 88. Or no, what is it? 87.5, but I'll do 88 instead. That's the fib level. But okay, so I got my imbalance marked up. I see the structure here. I see a gap that needs to be filled in. Price is already making its way down. Honestly, this is the 4-hour. So I already got a break to the downside. I feel like it's gonna pull back further. If it respects the 3812 level and breaks structure, like so right here, we got a bearish, bullish, bearish. This is structure. If it breaks to the upside and respects the 3812, then it'll continue to start buying. Mind you, I'm on a higher time frame, so this is a lot of pips between this area. If it breaks this, meaning it's respecting my 3812, I'm looking for buys. But because I see a gap and I see an imbalance down here and it's already broken structure to the downside, if it goes past the 3812 and does not respect this level, I'm taking it all the way here. Let me go to the 1 hour. Does that make sense to everybody? I am not a teacher. Jarrell is a teacher. Okay. I'm trying to make it as simple as possible. The best way I could do that is just showing. So you see this, my zigzag is showing me, is my training wheels is showing me the structure is being broken. And I know it's due for a pullback because I got an imbalance, a gap here. And then I got my structure here that, there's money here. There's people, there's a whole bunch of money here, and there's an imbalance because there were so many buyers in the market that made this gap happen. There was no sellers in the market to what? Yeah, to counter it. Thank you, babe. To counter that. So that's why we got this gap. That's why we got this imbalance. So many buyers, no sellers. So what does the market have to do? It has to correct that. So that's what I would be looking for on oil, Colin. Let me know how that plays out. This is going to be recorded. So if you need to go back to what I said, but yeah, it's just plain and simple. If it respects this 3812 and it breaks structure to the top side, you see this structure right here? That was probably that order block on the 4-hour. If it breaks this to the upside, it's respecting this and it's going to continue to the upside. But if it does not, and it breaks and we could drop down to a lower time frame, you start seeing more structure be. Why is the zigzags looking like this on there? I don't know. I just how do I make my zigzags? I don't know. They just look weird.
If you got it set to like a higher time frame one, following the higher time frame, that's what it's looking like.
Oh yeah, I got like higher. They don't switch.
Oh, that's probably what it is then.
Oh, okay. Make sure I have that. Where is it? Where does it say that at? Go back to the input. Go to top. Which one? Resolution or period? Resolution. Oh, okay. Short at the top. There we go. So now you're gonna have different information. Now go to go back to this? Yeah. Oh, okay. On the settings? Yeah. Change it to 4. Okay, there we go. All right, so yeah, that's what I wanted to see. On the. You may want to go back through that stuff you just showed, but it made a whole different. That was a daily zigzag. That was? No, that wasn't. I was on the phone. Yeah, but oh, that was a daily zigzag. Yeah. So you may want to go back through what you can show to make sure that it's correct. Now, let's look out. And I want to trade that over one that get on. Yeah, what time frame did you say you traded it on? You said the 4-hour?
Yeah, 4-hour daily. I will look for entries on.
Okay, gotcha. Oh yeah, you are a swing trader. I don't know how you do it.
I don't know how you scalp. That just melts my head. I freak out and all. I don't know how you do it.
Yeah. Yeah, see, to each his own is different for everyone. But for you, like I guess I could see how it's easy because it would just take away like that in and out. You just be chilling. For like how long does it take you to for your trade to play out?
Uh, I mean, I could hold my trades for weeks. Longest I've held trades for is about 4 months.
Oh my goodness.
Yeah. I done all right with that one, but yeah, about on average, about 2, 3, 4 weeks is usually in around that I would have my trades for.
Wow. Well, I hope I can get there one day. But my goodness. I guess yeah, I just like that right now money. I don't know. Yeah, 3 days is max for me. I'll be over it. But I get yeah, the amount of pips that I'm looking for is probably much different from you. Like what's your average pip count?
Uh, Average probably 500, 600 pips, anywhere between that and just over 1,000 pips. I'll
Okay.
get on
That ma-
average.
that makes sense then. See, we're past those days. We used to trade like that actually. But I don't know. Yeah, something just changed. We weren't looking for like the 1,000 pips and things like that anymore. We know that we can go in there and grab between me on the average is about 50 to 200 pips every day.
Yeah, I'd be happy enough being able to do that. Just get them pips and yeah, just like trade for 2, 3 hours and just
Yeah,
be done for the day. I would like to be able to do that, but I get
yeah.
down to them
They
lower
would have
time
to be
frames and it just
well, you're trading oil. It would have to be like those volatile pairs in order to do like yeah, something like GU, I would go crazy.
yeah.
Or EU, I
I
would go
like
crazy.
I like the volatile stuff myself.
But so yeah, I
Yeah.
was showing here. So you got this break to the upside here, but we got the gap and then we got this structure being broken to the downside. So we know that it's pulling back to fill in this gap, this structure, this imbalance. Yes, yes, yes. Jarrell is saying that it can come back up and then fill it later on. So that's why I was saying like this bearish, bullish, bearish. If it's going to come back up before it comes down again, it's gonna break this bearish, bullish, bearish because this is a very strong um structure indicator. This is one of the most how do you call it? Yeah, can like the strongest candle patterns when it comes to like order blocks, bearish, bullish, bearish, or bullish, bearish, bullish. It's very strong structure. And if you see this on the higher time frame, most of the time it pulls into this retest and then it will go this way. Um, do you want to say something? Jarrell, I mean, yeah, Jarrell want to say something. I know nobody was in the waiting room. My apologies. But have we've talked to you guys about the bearish, and the bullish, bullish candlesticks, right? When we talked to you guys about order blocks.
Okay.
Yeah, I think you did mention it before.
Okay,
Oh,
so yeah, the bearish bullish bearish, the reason why it's so powerful on a higher time frame, because you gotta unpack that. Unpack what that really is on a lower time frame. On the daily, that's a whole daily or a 4 hour area. That is a lower low, higher high, then a lower low being broken. So, and we know when price makes a structure on the higher time frame, it usually holds. So if you got a 4 hour or daily bearish bullish bearish, most of the time price will hold in that area and continue in that direction if it's in the direction of the trend. So what a lot of people will do is instead of just taking the order block, because a lot of people don't learn, just take order blocks by itself. It's not a winning game. You need confirmation. So some people will wait on a bearish bullish bearish or bullish, bullish. When it hit the higher time frame, bearish, bullish, because that means price has made a structure on the lower time frame than the time frame you own. Which you can see is still on there, but a lot of people don't understand really what a bearish is. But all it is basically is a price action. That price made a lower low, lower high, and then it made another lower low. And the same thing, higher high, higher low, higher high. That's all it is. But it's very powerful on a higher time frame because we know when price make a lower low, lower high, lower low, most of the time those things hold. Price action hold. So it should hold there if, like she said, at the area. If it don't, it may go up a little higher. But it could just hold there. But I'm gonna let her finish because we're about to get ready to end this.
Yeah, so I do see like another small imbalance here above, right above. It's very small though. But these matter because if I went down to the lower time frame, this is a decent sized gap in the market. Being that the structure was broken to the downside here, it can come grab this imbalance and then drop to this one. So the market is definitely on this 4 hour going to play between this area here. But that's why I like my fibs, because my fibs lets me know where am I at in the market. Anything this way, I'm taking buys. Anything that way, I'm taking sells. So that would be the main thing I'm looking for. So I literally probably, yeah, if I was using the 4 hour, I would have my little lines marked up and I'm looking for breaks and I'm looking for a pattern, a break and a pattern on the lower time frame to take this down if it's not going to respect this 38.2 level. So I'll be looking for a quasi or a head and shoulders in that direction, which, yeah, should play out either on the hour or you could drop down to 15 to 5, whatever it is for that, for the best entry. But that's what I see on gold. Like I said, this will be recorded if you want to go back. I mean, not gold, US oil, for it to come up here, either break and buy, come below here and sell off to at least bare minimum this imbalance right here. And was there any more questions? I don't think I have anything else. Anybody got any questions? Oh yeah, I did want to ask you guys, I got a question for y'all. Do you guys have your rules written down somewhere that you follow every single day? Because that's another big thing when it comes to trading. Most of the time, everybody's just like wishy-washy. They don't have like their set. I need to see this. If I don't see this, I'm not getting in the market. JS, I know you don't got a mic, but you could type in the chat if you have rules written down or not, or somewhere handy. Oh, JS left. Oh, okay, okay. I didn't know. All right. Well, that's all that I have for you guys. Oh, okay. He said he had to leave early. If there's no questions, I'm gonna end it right here. This recording will be available somewhere. I'm not sure where, but I'll let you guys know. But only the people who showed up can get access to the recording. If y'all feel like y'all want to share it to anybody else, of course you can. But I'm not gonna drop it in the team chat because they should have showed up today if they wanted to see it. But yeah, that's all I have. So I will see you guys. If you got any questions, hit me up.
Oh, that's great. Thanks very much. That's actually been great. I've learned a lot.
Yeah, no problem. Calling, if you got questions, just hit me up, okay?
Yeah, will do. Thanks. Thanks very much to the Parias. I'm actually going to look more for these a bit more because I can see just how good they are. Like I've heard about them and I kind of looked for them, but I never really paid that much attention to them. But now I'm
Mhm.
definitely going to.
Yeah, when you're about to take your entries, just kind of maybe do a double check and see if you see anything on the hour, the 4 hour. Where do you take your entry? You say you take your entries on the 4 hour?
Yeah,
Yeah,
but
look,
then
yeah,
like on the 4 hour, if I see one, like suppose that would you, if you were me, would you like drop to the M15 or M5? Just look for the same thing then.
the hour, yeah, because you're a swing trader, so I wouldn't go past that hour.
Yeah. Oh, well, that's cool.
Yeah. So yeah, like even here with your US oil, you already have somewhat of like a quasi being formed. It probably just needs more time. Like I said, it could bounce up here into this area to you can say it, babe. Jarrell want to say something. Hold on.
Also, can you hear me, Colin?
Yeah, I can hear you.
Okay, so when price get back into that bearish area, what you want to do is probably drop down to maybe um I mean, you're already on an hour chart, so I will wait for price to probably give me a quasi there. Also, it could be a minor quasi. It don't have to be a big quasi. It can be a minor quasi, such as like candlesticks. Like you can see like a high, a low, then the last high getting broken. I mean, the last lower high getting broken into the downtrend, and probably be looking for that to transition there into a downtrend because there's a lot of structure to that left that could cause price to the hesitate there. So we'll kind of like play it by ear and just see how price play. But when price get there, be looking for quasis. Like that's the biggest thing. Look for quasis and head and shoulders in those areas, your key areas that you look at the trade, because price has to do that for it to switch. It has to go. It has to break the left side of the structure or the right side. I mean, the left side of the structure always.
Yeah, yeah, that makes sense.
So
So yes, I'll have to start and look more for that
yeah,
bearish, bullish, bearish thing.
it's the basics one on one. We learned this a long time ago on how we
Yeah,
first started trading on what how price get broken, right? That is a law of the market. You know that. Like the price can't
yeah,
go into a downtrend unless it breaks the left side structure always. So by default, if you go off that and then you understand price action, you will by default over time you will be a profitable trader because you're trading in the direction of always when the market is breaking the left side structure to go into a downtrend at key areas. Does that
yeah,
make sense?
yeah. That makes sense. That really does.
Okay, so
Yeah,
I'm gonna give her back to her. We about to end this call, so I'm gonna give it back to her and let her see what she's gonna say.
no problem. Thanks, Jarrell.
Yeah, it, yeah, my advice would be to like, YouTube is like the best free knowledge you can get out there. So just type it in. There's a lot of people that talk about Quasimodos and also Head and Shoulders. And like I said, I'm not a teacher, but I can show you guys like what I look for and hopefully you guys understand. But there's some really good teachers out there who teach Quasimodo and Head and Shoulders and how to look for it. Um, and yeah, I would just advise you go do that research on your own, to really gain knowledge of it, and then also the fibs, because actually I'm gonna actually look at oil just to see if it play out. I'm gonna keep my little markings on here and see how oil plays out, because I don't even trade this like that. I don't know how you do, but yeah, I just want to see because this has really, really, really been working for me. And it to me, it's just so simple. I don't have to have 1,000 indicators. It's like it's the basics. It's price action, break, retest, take the trade. It just has a little bit more to it, a little bit more explanation. It's not just a W. It's not just an M. It's an actual pattern that I'm looking for that actually looks like a W or M, but I need to see the full pattern in order to take the trade. Well, really, I need to see the left shoulder, head, and then I'm getting in on that right shoulder. That's my entry, because I saw the head break in the direction of the trend that I'm trying to take my trade. So it's as simple as that. But yeah, I ain't gonna keep y'all. I appreciate you guys for coming. If you got any questions, hit me up. Enjoy the rest of your Saturday. And Jarrell said, appreciate everybody coming. Mike Pyron, he'll talk to you later. All right, bye.
Yep, thanks very much, Annalena. See you later, Jarrell. Have a good weekend.
Thanks. Bye.